Hello everyone, Mike Arnold here, co-founder Path Trading Partners, along with Bob Viacino. And where did I go? My cameras are missing. Oh well, guess you won't get to see me today. I don't know what happened to my cameras. Let's try a second screen. There we go. On this one, it's just on my main stream, so we're good. It's lucky I have two cameras, so we'll have to sort of do it this way. Yeah, quite the bloodbath today. It was not very bullish price action anywhere. This was a pretty, we ran up in the S&P and then rolled over and took a bath. Please tell me about the bear market. This is not a bear market yet. It's a warning shot because now here we go with the, by the way, if you're new here, please do consider subscribing, ringing the bell, and liking the videos. It helps us get a wider distribution. So once we start getting up 180, everything went with it. 180. Well, you clarify that for me. With the S&P, here's my S&P chart. Let's see, here's that 1 hour. Let me add in some other stuff back on here. Let me modify my settings. We don't need these two. And there we go. Here was the bullish line, the sand rallying up, staying up there overnight, and then little topping pattern right here, and the morning session just back below the bullish level and never recovered. I was watching to see if we'd hold this 46.67 key closing area. We did not, which is not very good for the short-term bullish case. I mean, it's really going to come down to what happens on Wednesday, though. That's going to be the key area. Let's take a look at that daily real quick. So you see here, outside day with this big reversal. We can update our levels, but outside day, higher high than Friday, lower low than Friday, outside in a reversal day. Not only a reversal day being down, it essentially engulfed the whole upward candle from Friday. So that is not bullish at all. I mean, technically we're still in bullish mode because we could even come down and close above this bottom of the rotation zone and be fine. It would drop to neutral mode on a close below about 46.38. And overall, I mean, neutral mode, I still can't get in full-blown bearish mode. Let's see, the 50% area on the rally up is about 46.07, and my 62.5, which if we close back below that, then I'm start to get serious bearish mode. So we could easily pull back more. You could easily still pull back, get to neutral mode, get to that 50%, and rotate back up with a year-end rally. But where my key line in the sand is, if we do shift to neutral mode, my key line in the sand is around this 45.78 area. 45.78 would not be good. Would not be good at all, because then I'd start watching for the trend line tests and breaks to new recent major swing lows. But still, we're still holding up. I mean, there's still been major selling pressure. This is a major resistance area. What's very interesting for me still, though, is if it can get a push and we can get some momentum, you know, above this 4,700, we could see one final upside rip. Long term, I'm not bullish. Short term, I still am giving it the benefit of the doubt with the year end, with potential Santa Claus rally, and even again, if it pulls back to the bottom of the rotation zone and the 37.5% retracement and then rotates back up, it's still set up. So to reiterate, neutral, as long as we're not closed below the rotation zone, we are in bullish mode. We closed below there. They're in neutral mode, was still looking for some bullish setups. We get a close below 40, this 62.5% level. Then I'm shifting into pretty significant bearish mode and getting very, very aggressive with stops and conservative with what positions I get into. Let's see. Yeah, I do think a bear market. I think as I pointed out yesterday on the live stream yesterday, the breadth is still absolutely terrible. Let me see if I can pull up that chart again. Hold on. Here's what I put up yesterday for anybody who didn't see it. And I don't know why you'd miss a Sunday live stream. Maybe you probably had something better to do than prepare for the market with me. But maybe caught on the replay. This is just a NASDAQ breadth. And the breadth has been falling off drastically. I mean, it's down at about 35%. If you come over here, I think I saw other stats. This is percent of members above the 200-day moving average, which is pretty key. And if you go above the 50, it's even way worse. So you've had it pushing up and deteriorating in market breadth, and I hate rallies that continue to push up with very limited breadth. It's working on just a handful of names keeping it up, keeping the whole sort of market rally up. Tomorrow we're going with little short term. If it can get above this 46.76 again, then I will target 46.87. Then above 46.87, I got to go back to about 47. I'll use minor of about 46.94 area, the 12.5% harmonic. And then 47.05. And then if we can get back above there, I don't know. We may have a very muted day tomorrow. Let's see. And this does not look, this is not a double bottom here yet. So to the downside, see the 4 hours shifted back to neutral mode. It has to get a key close back above this 46.81 to get back into bullish mode on the 4 hour. And let's see, still below this 46.67. This is a level is very key to me, this 46.67, which we're still below right now. Next level is 46.41. If we disappear 46.41, I'm back at about 46.21. Again, daily rotation zone right at the 37.5, but I'll get really concerned if we get below this 46.41 area. Let's see what we have. Yeah, I mean, it's not just a fact. You have these. Essentially, we have Apple holding it up now. It's just all Apple. Uh, but you've had Facebook, you've had Amazon, not looking so hot. We'll go through some of the stocks. Now the big tech stocks are drawing down. The markets are in trouble. They're in more substantial trouble. I guess still got to give this the benefit of the doubt, but I'm getting more and more cautious with this market. It's still got to break some short-term technical key levels before I'm really willing to shift into bear mode. And then major bear mode is if we get below this most recent swing lows back at the beginning of December. You get it. First warning sign again is that 62.5 level. Then it's major bear mode for me if we get below 44.91. Let's see. Market is rigged. Well, the Fed's definitely put some, the Fed put, we can't have a pullback, but now they've got a problem. Is this an early sign of inflation setting in? We've had inflation setting in. I now think it's more the fact that they're really trapped. They're way behind the inflation curve. The numbers that keep coming out, inflation are just getting worse, worse, and worse. There's no more transitory. Now more and more Americans are thinking that, hey, we've got a big inflation problem, and the cost of my living just to do stuff like groceries and everything else is going up on a regular basis. I mean, every time I go to the store, it's just getting ridiculous. It's getting ridiculous. So, and they're gonna do tapering sooner. They're gonna do it sooner, but they're not gonna be able to really raise rates that high. So they're caught in a rock and a hard place. At this point, I think we'd almost have to pull a Volcker at some point next year, and they should already been cutting tapering down before this. But again, if they do too much, they'll spook the markets, and these people don't want to see any market sell off because the only game in town is everybody put their savings and everything. What does a savings account get? I think they will increase. They have to budget at some point. I mean, here's your problem. Here's what they've done with these ultra low rates too. You have people, in their retirement and everything here. So what's the savings account get? Gets 0.1%. So where do you put your money if you need to earn something? And bonds don't return much at all. So you're putting it all in the markets. Now imagine if we had another like 40-50% market correction. All these people, especially baby boomers, people who've retired, or they're all in. There's not even a split portfolio anymore. 60% bonds, 40% stocks, 40% stocks, 60% bonds. It's now, you got to be, the name of the game is the markets. And so we start getting a major correction. You're going to crush that. I mean, there's nothing where you can really put your money in safety. Even gold and silver, you want to talk about manipulated right there. That's where a bunch of my stuff. So I think if we take another dump, the markets will get some pullback in gold and silver just because stuff gets liquidated, and then that's where a big percentage of my potential money's going. I have to always do my technical analysis, but that's what I am keeping an eye on. Sorry, getting sidetracked. Powell pump or dump this Wednesday? Well, Powell's going to announce increased tapering. I mean, he even might have to go with increased of his increased tapering because they can't raise rates till they're done tapering. They're not going to do that. So it's just a time frame for the tapering, but it's, everybody knows they're going to increase tapering. So that's the trick. It's like it's not going to come as a surprise. So will it just be an excuse? All right, that's out of the way. Now let's rally it through the end of the year. That's what I don't know yet. That's why I'm just going to be able to do the technical analysis. And as long as it stays above key technical levels, I got to go with the technical analysis. And it won't be a big surprise unless he does a massive quick unwind of tapering. Like we're going to be done with, we're going to really super ramp it up. Everything else I think already is being expected. Uh, so I mean, again, we could sit here. The breath has been terrible for a while, and this was a first warning shot, but then it recovered to key levels. So you have to still trust the technical analysis. The technical analysis, and when this thing rolls over, it's starting to give us a warning shot already. But I can still see potentially taking out this 47.40 by the year end. New highs, major divergence setup, still could possibly, even if you take out new highs, could keep this massive double top in place and then roll over. But I want you to also keep that in mind. We still have this massive double top in place on a longer term basis in the S&P. So as long as that's still sitting there as a potentiality, it's risky. Let's see. Do a video on gold and silver when you're at that point. Yeah, we'll take a look. We'll take a look at that. I touch on it every so often, but I think that we need a complete flush out move, and physical gold, silver that keeps getting bought off the markets. And the only reason it's keeping the futures markets depressed is because you want to talk about a manipulated, gamified market. If they had to do physical delivery, it would be all over. But they don't. They can cash settle, which I think is a load of crap. But you're going to get me started. NASDAQ. Here's our NASDAQ. NASDAQ's back to neutral mode. NASDAQ is back to neutral mode. You can see here dumping back below the key levels. Couldn't quite get up to my 418. And then just rolled over with this little double top pattern. So that was the double top pattern here, triggering and then just diving back down, back below bullish mode. Bullish mode for me tomorrow, if it can get any kind of rally, and it's about 16,193. You can go about 16,200. No potential double bottom there. Let's take a look at these longer term levels. Yeah, and see it's now back below this little support shelf. I'm actually going to bump this down at this point just a little lower with this key close right on there. That's holding a little more significance. So to the upside, we're at 16,157 as first resistance and first target for any bullish patterns around here. Then to get me in bullish mode, 16,193, 16,200. Above there, coming down with this level too. with this key closes and this little shelf right there, we're about 16,275, above 16,275, 16,324, then back to this high area we just rolled out of, around just under that 16,418. That level's coming down for me now to about 16,400, 16,409. To the downside, next area I'm still watching 16,000, 16,000, 17, 16,000. The 50% level is at 15,987. So here's a key little support area going into tomorrow with this possible revisit the trend line. And my absolute line in the sand, you have the 50-day exponential and the 62.5, and you have another retracement cluster down there. You get a close below this 15,870 area. I'm in bearish mode on the NASDAQ. Right now it's in neutral, and I'd be in bearish mode even before the cross of the rotation zone. So that's where that stands. Let's take a look at the Dow. The Dow pulling back. We have do you see this one harmonic, two harmonics? This is very key, and the top of the rotation zone. So this is a pretty key support level for the Dow. Dow also has a potential double bottom. The Dow again is if anything was the hot porridge today, it was the Dow. Hot porridge market was the Dow. We have this double in place on a 1 hour basis. It needs to close below 35,684. And you're back to a cluster right here, 35,570 first target area. Then you have another cluster here. Wow, this lines up really nicely. 35,817 area. Then back to my bullish mode, which is shifted to about 35,863. Bullish mode for tomorrow, sorry about that, is 35,637. Let's take a look at these longer term charts. Holding this is very key area. You don't want to see it breaking down below this 35,500. 35,500 is very key. 35,500. That's a very key area. If we break down below that, minor about 35,400, then my next key level is 35,323. Then I'm just going to about 35,200. And then below that, I'm at 35,81. The line in the sand for the Dow is 34,722. You get a close below this level right here, then I'm in bearish mode on the Dow, but that's got a long way to still drop. To the upside, let's see where we're sitting. To the upside, we have that double, above that double target. Looking to see if there's some more significance in here. But we have all those targets. Above that double target, I'm going to about 35,900. And then above there would be a return to the 36,000 area. So that's it to the upside on the Dow. Let's see what else. Let's take a look at some of those. Some of these, like those, well, FANG stocks, or FANG Mag or whatever, because you put Microsoft in it. So Facebook just caught in this huge consolidation area. Huge consolidation, not underperforming, not outperforming, but not breaking down yet. In order to really break down again, we'd have to get, let me move this out of the way. I hate when I grab the wrong thing. There we go. In order to really break down again, we'd have to get a close back below about 306, and to break out to the upside above about 353 area. Other than that, it's not contributing. It's not really taking away. Apple, that's a pretty bearish reversal bar right there. What happened to my Apple levels? I thought I updated those. Oh well, they got reset. Let me just fix this. Sometimes things don't save on this when you think they're gonna save, they don't actually save. Holding the 4 hour rotation zone, but that's a pretty key reversal, and it's still off the daily a large amount and off the weekly. See, you could this is where your risk lies. I mean, Apple, look, if it were that, you could drop back to 164 and just touch the weekly rotation zone. So Apple, pretty big reversal. If it keeps pulling back, watch the 172. So that's weighing down after that huge run up with Apple. Microsoft minor, and we have Microsoft in the portfolio right now. So Microsoft is, although it's holding up still rather nicely. What else do we have? Google, not doing much at all with Google. It's sitting in this consolidation, not outperforming, not underperforming. I get concerned if Google starts breaking below 28.20. 28.20 is key for me on Google. I'm just going to run through a bunch of these that have been contributing stuff. Amazon, by the way, this is a potential double bottom now. Amazon just entered potential double bottom territory. So keep that in mind. It can easily still come lower, but my key area to watch for Amazon is this 35.50. It'd have to turn around, but rather than that, the momentum is down and Amazon is still breaking down. I was looking at that today. Apple bearish. Apple is so overextended. I'm not interested in touching it up here. It can easily turn around and still go up, but I'm not touching anything up there with Apple. It's too overextended and it is ripe for a pullback. Yeah, Nvidia got destroyed today. Nvidia, this is a real key line in the sand. And here's what I'm talking about. You know, when Nvidia way overbought from the weekly rotation zone, you start dropping below this low, this 280 area. You could see you could be back to 255 to 260 in a pretty big hurry. And you see how much that ran up and now it's starting to come down. Now, remember that chart and then take a look at Apple. See how much it's up away from its weekly rotation zone? It could easily return to this 164 area. So that's what's concerning me. So if you want more, if Nvidia is like the proxy for these momentum stocks just starting to get hammered. So if this holds now tomorrow and you get a nice rotation back up, well, then maybe there's a reprieve. But if it breaks down, then watch for that return to the bottom of the weekly rotation zone. Well, I was going to take a look at SoFi next, by the way. Not that it's in that fan made category, but I know a lot of people follow that. And here's SoFi. Again, SoFi still, it now has a potential double bottom. Potential double bottom, but you don't want to see it trade below about 1380. That would ruin the potential double bottom down there. But if it did turn around, you have waning momentum. You have now a potential double bottom. And remember, yesterday I covered SoFi. We needed a close today above yesterday's high. That obviously didn't happen. And I did a big discussion yesterday on front running and why I just don't go. I got contacted today even. Well, why don't you just buy? Why didn't you just buy? Because this is why you don't just buy. You wait for confirmation, something to trigger. This is why I just don't buy, because all right, we have a potential double, and I had a potential signal if we closed above Friday's high today. Did either happen? No. So there was nothing to do and it went lower. There's still potential trades in here. All right. There are still potential trades. Aggressive now, still in play. Aggressive buy on SoFi would be a close tomorrow above today's high, and the double is still in place. But why we just don't buy today? It could come down. It could come down below this 1380 level, voiding the double. So why would I front run that? Also remember, if you get an aggressive buy, you're still against this daily rotation zone. So it could easily just close above there, come up here, slam into the rotation zone and rotate back down. So anything you do with an aggressive buy pattern, you have to really manage the position closely, because you could rotate up and then rotate back down and be in these low 13s before you know it again. So that's not something that's a long-term buy. That's a very aggressive buy on trying to nail a bottom. Okay? And Bitcoin, I was going to touch on. You guys, boy, I should just have you guys run the stream. Nvidia down because Bitcoin is down too. Bitcoin, we couldn't hold. We're sitting still right at the 200 for this. Remember, we completed that double top, but this is looking weak. Really, one I want to take a look at is Ethereum. So back on the 10th, Ethereum triggered this double topping pattern. I know it's messy. I know it's messy, but it triggered that double topping pattern and now is rolled back over. So I am keeping a very close eye on that. See, it came back again, triggered the pattern, daily rotation zone, and then rotating back down. So be very cautious. And when we don't have broad market leadership, like right now, we have narrow market leadership and stuff's getting hit. You know, you have Tesla getting hit. There's massive selling, and it wasn't just Elon. We'll have to find out. It had to be some Elon selling today. It had too many footprints like it he's had in the past, but we have to wait for that Form 4 confirmation. But it wasn't just selling in Tesla by Elon today. Tesla's been another momentum stock that's starting to get hit pretty hard. And Elon's selling doesn't help, but I talked about that, I think, yesterday too. Anything else that we want to peek at before I'm done? Anything? Anyone? Bueller? Anyone? I'm not seeing anything else. Sorry, we didn't have the multi-camera set up. I'm going to have to go fix that before the Tesla live stream. And that's where I will see everybody. Yes, Wavy, we're going to do Tesla in 30 minutes. So you're going to have to tune into that. I'm not going to ruin the Tesla. Oh, you want... All right, we got one more. This is the last one. Square. Or sorry, SQ Block Inc. We got a potential double. You got a nice little potential double to watch for with some waning momentum. So there are some bottoming positions in some of this. Now, it is lower probability since it is against the daily rotation zone. But this is another one. Would I front run? No. There is actually, if you do, again, super aggressive play because you're against the daily rotation zone. But if you get a close above today's high, that is a super aggressive entry with something I follow. And then now this is where that could be a triggered trade to front run into a potential double. But I'm managing it based off the rotation zone, okay? Because again, you could trigger a buy, come up into this rotation zone without ever triggering the double and still roll over again. So any buys, there are some stuff that's looking like interesting buys, like in SQ also. But be very careful. This is not something that because if it comes back up, triggers, rolls back down, what do we have if we come down here again? We have a triple bottom. Triple bottom is slightly favors a continuation pattern. So that's where you can do an aggressive play, but you have to really manage your stop and this is not something if it starts rolling over that you just want to sit and hold to new lows. You want to say, okay, I took my shot, I'm out. I'll wait for a different setup. That one, because you can also, get something like this triggered, raise the stop, take something off as it hits the side of the daily rotation zone, even get your stop potentially to break even. So if it just keeps running, then all right, let's say triggers that double, you can add stuff back. This would be trading around the core position I've talked about. So let's just go through a hypothetical scenario on anything with a double bottom like this. Even SoFi had it. So let's say based off your risk management, it calls for 100 shares. I'm just going to use a round number. Comes up here to this 187 area daily. You take off 50 shares, you move your stop up. Then let's say it doesn't roll back over, so you still have 50 shares on. It triggers a double. Add those 50 shares back. So not only have you also taken some profits, you're in with half a position from the double at a better price, and then you're in with the other half at the full double trigger. That's how you can use those kind of things to trade around the core position. Conversely, you go in with 100 shares, comes up here, hits that, you take 50 off, move your stop even to break even. Comes back down, stops you out at break even on the other 50. So you made a little money. And then again, we got to go through all three scenarios. Worst case scenario is it comes up, closes above here, triggers. It doesn't even get to the daily rotation zone and just takes another move down, which case, all right, you're breaking to new lows. I'm out. So those are your three scenarios. But that's how you play. That's combining a concept of trading around a core position and how to notice multiple setups. I'm in one more aggressively, gonna not take it for granted that it's gonna keep running, gonna take something off, make sure the other part does not turn into a loser. If it keeps going, I can always add back. And with that, that's a pretty good lesson. I will talk to everyone later. Bye for now.